All right, I just wanted to go over one of my trades this week. This is actually November 19th. It's about 12:30 on a Saturday afternoon. Haven't been doing a lot of trading this week. This is one of two trades that I did. This is my most profitable trade, actually. Maybe I'll make another video on the other trade. This one's a little more complicated than the second one. Did a couple trades last week. Actually, I haven't been trading very much in the last month, and I'm just kind of getting focused again and doing some more trades. This is the pound US dollar, the British pound US dollar, and this is kind of what, when I opened up my charts, this is what I saw. This is what I was looking at. This thing has been in a pretty decent trend to the upside for the last month or so, maybe mid-September, maybe to mid-October. And beautiful. I mean, if you trade this long, you know, of course I missed this, but this is a nice double bottom here. You got some doji candles here that show that the trend's starting to reverse. You got this beautiful pin bar here. You could have played that and made some really killer money on that. But what I saw when I opened up the chart was this consolidation on the daily. In other words, it went from being a nice uptrend to kind of consolidating and going sideways. You see these highs here. It stopped making higher lows, basically. You see how when the price goes up, it kind of makes higher high, higher low, higher high, higher low, and it stopped that trend. It made a high here. It wasn't able to take out that high, and it just started consolidating between about 159 to 161, it looks like. So that kind of caught my eye, but really caught my eye was this big bearish candle right here. That was the first thing that I saw. Well, that and also the FOSI. This is the RSI. The RSI has been pointing down for a while. That's just showing that the price has kind of been weakening for a while. But this is not a bearish engulfing. It looks like it's almost a bearish engulfing, but I caught that in that the close was below 159. Now I used the 4-hour as a trigger chart, so let's pop over to that. Let's take a look at something. Let's see if I can compress the chart a little bit. I've made these dashed lines. This is where I put my entries and my stops, and I'll go over that in just a second. But what I saw here, and one thing that really just popped out at me, and this one thing that I consider when I scan my charts, I scan my charts pretty quickly, and really if something doesn't pop out at you, you know, for me it's got to pop out. I've got to see it right away. You know, if it really stands out to you, then it's something to examine a little closer. And this is what popped out to me. You've got these different lows here. You've got 1, 2, 3, 4 times this support area has been touched. So this is a nice zone of support right around 159. So when I saw that, I thought, you know, and the price has kind of leveled out. You see how these highs are, it's just not taking out the highs. It's just kind of bouncing up, not quite taking out the highs. It's no longer making these nice higher lows that you look for, and it's just kind of stalled out. It's weakening price. So what I thought was that if this is violated, this support level, that we might have a decent trade on our hands, and it was. I put my sell stop. Let me blow this up a little bit so we can see it a little bit better. My sell stop is this green line here. I put it right below the low of the Donchian channel, the last low. And the Donchian channels, really, all those are, it might look complicated, but really all it is marking the lows and the highs over the last. I've got mine set for 18 periods. 18 periods on a 4-hour chart is 3 days. So I'm marking the highs or the lows for the past 3 days. That's where I got filled. I believe I got filled on this candle here. You see, this candle right here is the one I got filled on, and it turned into a pretty nice trade quickly, which is what I like to see. I felt pretty good about it until I got down here, and I saw this. This is a bullish piercing pattern, and followed immediately by a pin bar. And it is right at this round number 158. So I had some nice pips in there, probably about 50 pips or so. Oh, and one more thing. Initially, this is the first unit that I put on. I trade 2 lots per unit. So I got filled on 2 lots. My initial stop was right here at 159.35. You can barely see that, but it's right on a grid line. You can barely see it, but that's about 75 pips away. I put that stop based on this high right here, this long tail. I just put it behind that long tail, and I figure 75 pips. Generally, I'll play 1 to 2 times the ATR and just kind of place my stops. You know, this has got a 56 ATR. I would just round it down to 100 pips for my stop, and that kind of makes it easy to add and subtract as well when you're kind of trying to figure out what your stop's going to be. But that's where I initially got filled. It was a decent trade until I got right here, and I decided to put on, you know, see how it's violating the bottom of this Donchian channel here. This is where I went ahead and put on a second unit or another 2 lots, and you can see this red dashed line here is where I put the stop for the second unit. And if we measure that out, I'm pretty sure that's about 100 pips as well. Yeah, it is. It's 100 pips. Sometimes I'll do that just because the math is easy, but put the stop there, and immediately this thing went against me. And this is where the patience, and when you're playing these longer term time frames, it's really tough on your nerves sometimes, because you come back and you check your charts and you might be down 50 pips. You know, I was reaching a point here where I was at break even. I was actually up 50 pips on the first lot. I was down 50 pips on the second lot, which is a break even trade in the account. And you kind of got to kind of weigh it out how you want to trade it. This pin bar really blew my mind, because I was getting ready to pull the trigger on this. The next candle was a bearish candle that took me down closer to my entry point on the second unit, and it kind of made me feel better about staying in the trade, which I did. At one point in the trade, I was down to 157. I had moved my stops down. I had moved my initial stop down to the break-even point here, and I had moved I had left my second unit, my stop here. So these 2 stops were at the first entry price. What happened was it bounced up here, and actually I got out on this candle. I took about a 20 pip loss on the second unit. I had about, I believe, about 100 pips profit. What is that? Well, about 90 pips profit on the first unit, and I took about a 20 pip hit on the second unit, so I netted out about 70 pips on the trade. My compounding actually worked a little bit against me at that point, but what I had thought was that, looking at the daily chart, that we might see this thing go, after it broke this level, we might see it go down to lows here, which would have been 200 pips, the lows down here, which is about 300, or at the very bottom, which is 500 plus. It may still make it down there. The only thing was I just wasn't willing to weather all of this stuff. I definitely would have been stopped out on this candle. As it turned out, I wound up making 70 pips on the trade. So, you know, I'll take it, and that's kind of the way the ball bounces sometimes. So that was my pound US trade. Not very, not as fruitful as I would have liked it, but still, I can't complain with 70 pips. So that's my pound US dollar trade for the week, and we'll talk to y'all later.